Good afternoon, traders. Let's get started with today's recap. This is Christian Freimertz, Try Make a Trade Group, and today is, I keep wanting to say Tuesday, but today is Wednesday, December 28th, and we've got two more trading days of the year. Kind of feels like this year is last couple of days feel like we're going out kind of the way that we went into 2022. Very weak price action. Growth continues to get repriced in terms of what we're seeing and where the weakest areas of the market are. S&P was down 1.2% for the session. Q's down 1.3%. IWM down 1.5%. And again, most of this price action coming, over the session rather than in the overnight market. Bonds, I thought that they were an interesting tell again for the day down. They started, kind of similar to what equities have been doing recently. They started the day green, and they gave back all the gains and finished down on the day. So that's interesting, as well as what's going on in the commodity market too. Commodities have been a little bit stronger lately, like metals and mining were particularly strong yesterday. The opposite of follow through, I would say. Again, that's also been a theme of 2022, areas that show a little bit of strength, some interest, and then the next day they reverse and they reverse those gains. Same things with the Chinese internet group. That group was up around 5% yesterday, down 4.8% today, giving back a lot of those gains. I want to start a little bit with the commodities. That's where we start of the day. That was also a chart that I tweeted last night about oil. Has had a habit of making lower highs since the month of June, when we topped out at like 117. Since then, we've got this pattern taking place of lower highs. Every peak has been met with some selling, and this last bit, we're like right into the bottom. We've had a nice rally from the lows, but right into resistance of 79.95 and getting rejected there. That is crude oil, or WTI crude, down 1.1%. And again, that barrier is right around $80. If this continues to fall here, you can go with the confirmation that this is another lower high. Oh, by the way, risk disclaimer right in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Let's go over to nat gas as well. This was down 7.5%, a little bit off the lows, but really some things kind of took a hit, even though that nat gas has been pretty weak over the last few months. Again, going back to August this time, because June was here where crude made a high for the year. And nat gas did go a little bit higher there in August, but since then, lower high, came upon here, a little bit of a bounce here, faded. This actually got above the previous peak, but that was the last high, which was back in the middle of November. That was at 7.7. And if you look at this percentage move, now you're looking at 4.7. That's a decent slide going here in nat gas. And I got a couple questions on Twitter about, oh, well, I keep hearing about this and this story about cold winters and so forth. And, I mean, one thing that I would say is maybe turn off the news. The price action is going to tell you so much more. And, if that's where you're getting your trade ideas and so forth, I think it's going to be a very tough trading go for you, because what you find on the news, first of all, a lot of it is past information and a lot of it is incorrect information. So nat gas is very telling, and even more so when you look at the coal stocks. That was something that I tweeted out earlier this morning. But CEIX, which was a name that was holding up decently, got hit pretty hard today, down 11%. So coal names getting hit really hard. BTU was also down 9.5%, right? And then if we look at our ETFs, and this is something that we went over pre-market, was just saying that you might want to, before I even saw some of these big moves, but talking about being a seller of energy on this bounce. Note, for example, XLE had a couple nice days of gains, but did not get over the 50-day moving average and kind of moving back down here. So still on an uptrend above the 200-day moving average, but you kind of have to think about, I think, and the way that I think about energy companies and so forth is I get more bullish if the underlying commodity is trending higher. If it's trending down, I tend to minimize positions and take off positions. And that's something that I did, a couple months back. I've tried to day trade a little bit with energy names, but really they really haven't been showing too much strength, especially since they made a peak. This is actually back in the middle of November. They've been kind of tough sledding, and smaller gains even on these moves up. OIH I thought was, energy, which oil services, which is a lot of Schlumberger and Halliburton, getting up to that downtrend line, but also kind of stalling out here. So again, no matter what area of the market is, even if it's been something that's been doing well for this year, you still cannot get complacent in those trades, right? You still have to be a risk manager no matter what area of the market is, right? And getting comfortable sometimes is the worst thing that you can do in some of these areas of the market. Let's go over to the S&P because clearly that's a development for the day. That's the first real major break, I would say, of the value area for this month, right? So December, we basically started the month up here. We rallied a little bit. And this was back on the CPI numbers that we had, and that marked the high of the month. And again, never really got back above the value area for December, and now we're sitting back below. And as we've talked about in several videos, that if we do break this value area, the next area that you can kind of concentrate to the downside is 37.52. All right, that's S&P. It gets uglier when you look at the NASDAQ, of course, which has been exhibiting relative weakness for a while now. But this is now coming in and testing those previous lows. So I think that's a new closing low for the NASDAQ 100 futures. Right. And of course, if you want to look at it in terms of this way too, you can look at the Qs, same thing, but different time frame, I guess. That looks like a new closing low as well. So, where is this headed to, right? And how much further down? Well, first of all, we don't know that. We just know that it's trending down. We know that, wow, look at this. And it could be that NASDAQ will start the period, the new year, depending on what happens in the next 2 days, could be starting the new period below value. I mean, that's pretty remarkable considering just a couple of weeks ago, we were around the point of control for the new period, right, where a lot of volume has occurred this year. But if this continues to trend lower, we may actually start the new year below the value area. So again, that's not going to be a good sign for for this area of stocks. We're going to talk more about that about a week from tonight, actually Tuesday. I keep thinking today's Tuesday, but we'll be doing that Tuesday of next week for members. We'll be doing a value areas webinar. We did one of those in the beginning of the month for December, which I think was quite revealing. And, we're going to talk about what how the value areas are lining up, right? What kind of signals we are seeing with those. And this could be telling depending on how we finish the last couple of days of the year. All right. And again, looking at the daily chart, next area down. And if you like I could do this in Qs because I know people seem to like the Qs a little bit better, but 243 could be an area that we get down to. Let me just look at the weekly chart here too. Yeah, I mean, I don't really see any major support. This is 244, which is going to line up with that 243 VPOC. But the other thing is we're really not at this point oversold either. So it could be that we get oversold if we continue this path for the next couple of days. All right. Let's move on to IWM. IWM still has a ways to go. I mean, while the price action is very weak, looking like it's below all the it is below all the short-term moving averages. This is something that we've been talking about, and I try to really hit this point home in the weekend video for members, is that this is a weak looking picture in the major indices across the board, right? With price action below all the short-term moving averages, as well as now below the value area. And I think I used the word teetering for the S&P, and that's no longer teetering, that is now breaking down. Diamonds, again, they continue to be the stronger of the major indices, even though the Dow is only 30 stocks, but this looks like it's vulnerable here too. Now getting back below, losing the short-term moving averages, the 5, getting rejected at the 20, and now getting back below the 50. So again, that is more also more of a defensive tone right now, right? And coming to the bottom of value, still has the 200-day moving average, but again, it looks like a position right now of weakness. All right, so talking about a couple positive things, a couple negative things. Well, there's not that many positives to really talk about. We talked about how rates, right? Did I get to, oh, I did not talk about rates. So TLT, this was a nice put trade that we put on about a week or so ago, when we saw a lot of heavy put buying in here. This worked pretty well. And if you look at what's been going on, right, in the last, basically the last 2 weeks, right, it's been about a down 8% move, almost 8%, I think, in what we've seen in TLT the last couple weeks. And one of the takeaways from this year, if you've been actively trading, that high growth stocks do not like higher interest rates. And that's what we have right here, because of course we're looking at the price of TLT. Yields are inverted, and the more that yields go higher like this and fast, it is pressure on those growth stocks. Looking at the yields right now, we're almost back to 4% in the 30-year, which is what I have on. And 4.35 is where you see the 2-year right now. So yields are continuing to move higher. Prices are coming down here. That to me is a warning signal, as well as once we broke into the value area for the month. Notice as well that TLT is below the 50-day moving average. The 30-year bond futures right now also cracked below the 50-day moving average today as well. All right, so that's more negatives. There's really not too many positives that I can go over. I did see XBI closed in the green, but I talked about this chart. I'm not sure if I talked about it in yesterday's video, but I did go over it in the trading room yesterday, saying that this is all coiled up here. Usually you do get a big move, right, out of a coil like this. The definition of coiling is when 3 moving averages are wrapped around one another, but it could be to the downside here, because that's the way that we're leaning. And even though this had a green day today, I would be looking for further weakness here if we cannot get back above 79.13. Also a break of the trend line. A couple other stocks to kind of talk about. I think Apple got a lot of attention today. That's a big red candle for Apple. I see a lot of comments about who owns it and whether or not they're going to buy more. I don't think that really is going to matter that much at the end of the day. Sure, they could buy more, but really you're going to have, the selling pressure could definitely outweigh the buying. At this point, what we went over in the room earlier was, now that this is kind of breaking, has broken the previous support. 119 is probably a level to look for. Also, I think I mentioned 120. 120 is the bottom of value for the year. Again, we're only going to have this value area for a couple more days, but it just kind of tells you where the support lines up. I see around 119 and 120. So that's about $6 down. Could that happen in the next couple days? It could, the way that the selling pressure is right now. So if you're looking for a target to the downside, that's what I would be watching. Now, let's talk about a couple other things. because I don't have a lot of things that I really want to go over here. This is always a case, and has been this year, where when you have heavy selling pressure like this, really negative breath for the day, which has been the case now for a couple of weeks, is really just to be a risk manager and get out of some trades. I mean, I tried a couple things today. The last trade that I put on yesterday was Crocs, which I still think looks okay, but I understand what this market is telling me, and that it's just too weak, especially to be in something like this where we know breakouts and bear markets are very, very difficult. So I got rid of this trade for now, even though it didn't go through my stop price. I got out of a couple other smaller trades, and I'm almost sitting in 100% cash. I got out of this trade, which again, Crocs, I took a target in yesterday. TMDX, when I first put this trade on, I took a target, but Caterpillar is another one too, where this is wrong. Oh, here it is, 235. For some reason, I read 253. But yeah, the trailing stop on Caterpillar, which is another name that's been holding up. Boeing is another name that I'll be watching. So again, like, this is what I normally do at these times, is set a lot of alerts. Even though there's nothing wrong with this Boeing chart, it's something that I'll revisit tomorrow, because my signal on this morning got canceled pretty early, right? This is the first hour of the day, the 9 o'clock hour. Notice it gave you a pretty good hint that it just didn't have the power, the momentum to get through the value area, which is 190.40. Notice how this first 1 hour bar closed right below that value area, and then kind of just continued to not act well for the rest of the day. So, that was something, that looked at for a little bit and said, nope, not going to stay in this trade. And you could see kind of, what has happened since. All right. And that's basically it. I'm sitting with like a couple partial positions that I've already taken targets in, and that's it pretty much in cash. And we'll see how the rest of the week goes. One of the things, again, that we look at every day as we get started in the first 15 minutes is what breadth is telling us, right? That's given us a good picture, and that's translated into a bearish looking, bearish crossover with the NYSE and the NASI. That's NYSI on stockcharts.com. And I overlay that with a 10-day moving average, but you could see again, right? And this has been the pattern. We had one day in here, I think, where we were we were positive last week, but here's what the performance looks like, for this month. When we look at, sorry, that's TLT. We've had out of, so this is the beginning of this, the beginning of the month. And notice the performance of SPY this month. It's down 7%, right? Out of how many trading days have we had so far? 15, 17, 19. We've had 19 trading days, and we've only had 6 positive days. That's not good. And, if you are managing to get through this, one of the things that we talk about every weekend in the TTG macro video is that bear markets will wear you out. I'm going to talk more about this as we, kind of set up our plan for 2023 and talk and communicate that with TTG members. But the main thing is to be ready for when new opportunities arise. And, I think that will take place at some point in 2023. I can't tell you when. I think that you basically just have to let this, happen and stay, from a long aspect, is basically just stay out of the way. And that's just trading 101, right? In terms of when there's very weak price action, is just basically get out of the way. And what's the term that I'm looking for? Preserve your buying power for when there's a good buying opportunity. So that's the phase that we're in right now, and we'll talk more tomorrow pre-market. Starting at right around 9:05 every morning for Tribeca Trade Group members. Guys, have a great night. See you tomorrow.